I always love that jingle. Thank you so much. It's great to be back on the startup stage. It's particularly great to be on this panel with three other fantastic, kick-ass women. So an all-female panel always must be, give a little shout out to the VivaTech organizers for that. We've got so much to dive into on this topic, which I feel I spend so much time talking about impact, what impact is, what is real impact, what isn't real impact, the pipeline, all things we're going to go into today. But Laurence, I wanted to start with you. You've been in this sector nearly 11 years, 10 years and running. What I want to hear from is what you're doing, how you're identifying impact projects to invest in, and what has really changed over those past 10 years in terms of what you're looking for, but almost more importantly, what people are bringing to you when they come to you with their vision, their impact philosophy, their thesis.
That's a big question. Hello. Well, we've been investing for the past 10 years in startups. So this is Citizen Capital, French-based impact investing fund. And first, we started investing in late-stage growth startups. And we have just launched an early-stage fund that invests in seed and pre-Series A's startups to support entrepreneurs who use technology to serve a social or environmental problem, to solve a social and environmental problem. And so we often, of course, bump into education issues. We're right now looking at a fantastic project in, for example, reading proficiency for kids in elementary school. We're often into employment issues, health issues. We've invested in a second opinion in medical expertise. So that means if you have a serious or complex disease, you're allowed to have a second opinion and have an access to a very high referent in your domain in terms of medical expertise. And they aim to democratize this to all the population. And we launched this fund for two reasons. The first one is that we needed to get earlier into companies for several reasons. First, because building impact is a path. Doesn't just pop up with an impact strategy all made. It's a work we do with the managers, and the earlier we're with them, the best company we build. And there's a whole lot of market reasons also. Among them is valorizations today that push us to go very early in companies. And the second reason is that technology for us is not neutral. And we've been having a lot of early stage deal flow, and we've been very eager to be able to invest earlier. And also because technology, we believe technology is what you make out of it. So it's the use you make of technology is going to shape the future of our world. So we're pretty much convinced it has great consequences on the future of our societies.
So Clara, what Laurence does is exclusively in what I would call the traditional sense of impact, in the sense that every investment opportunity, even if it's not fully formed when they arrive at you in terms of its social, environmental impact for good, you can help develop it along the way. But what you do at Raise is a bit different. And I want you to explain how Raise works, what you're trying to do with it, and the phrase which you use, which I like the best, the benevolent economy, and building that, and how Raise fits in.
Thank you, all of you. And I love what Laurence is doing. I think she's the one of who has been pioneer in France in impact. And I think it's very important to understand that we can't continue like we are continuing with the accumulating the capital as we do in a few hands on one hand and having a lot of association doing for good. So saying in one way to make it very simple, that when you are doing business, you are not a so good person. And when you are taking care about people, you are poor who have to ask money from the wealthy people. Of course, this is absolutely not the reality, but it's in the mindset of a lot of people. So what we have tried to do with Gonzague when we started Raise is to say, yes, we can do business, we can do profit, we can have an investment company and organize the give back from the very beginning. So the way Raise works, we do private equity, we do real estate, we do venture, we do impact. So we are a full player investment company. But we, the team, so Gonzague and me and all the team, the 40 people we have in Raise, are giving back 50% of what we call the carried interest, which means the revenue that the team earns when he does well his job. So it means that 50% of our own benefit goes to a foundation dedicated to entrepreneurs. And guess what? When we started that with Gonzague de Blinière, the idea was to support the startup and say, hey, we are in a country where we don't have enough startup. It was 5 years ago. Now it has grown a lot. We want to support them, help them to grow faster, to be bigger, and so on. And we will not count on the government. We'll do it by ourselves. So we will create this foundation who has already 26 million. And we support startup by giving loans, by giving a lot of advice, creating community, organizing an event called David and Goliath, where we select the best partnership between big startup and corporate. And guess what? That has made us much more clever to be good investor. Because when you meet every day 1, 2, 3 startups a day to support them, you understand better the word coming. You understand better the needs of the new needs. You understand better the trend. And the main trend is what Laurence is saying. Everyone cares for the planet today. It was not the case 10 years ago. Everyone cares for more social link today. It is a huge priority, and it helps us to be better investor in the other field of private equity, real estate, and venture. And we started, Gonzague and me, 5 years ago. Now we have 1 billion. And it shows that when you put generosity and when you build your business by thinking from the very starting point that the give back is part of your business, everything is better. And it's why we have created the movement for a benevolent economy. And we have made a survey with 500,000 people in France. We had 220,000 answers about the question, what should we do to have a better benevolent economy? And you see that really everyone wants a benevolent economy. Everyone wants to be happy going to work, working in a successful company, but also a company who cares about environment, cares about the social link, and also organize the give back. So we really think that it is a new motto. It should be a new motto, and the investor like us should look much more to those kind of startup and also of company, because they will become more successful than the other, because they will recruit the best people. They will get the best customer because it gives a sense and a value to what you buy, and it will support and help the society.
We're going to talk a little bit more about this reshaping of the capital agreement, is what I call it, more than structure. But Alisée, you're at a very different section of this framework, you're looking, your investments can be as little as 50,000, you're working in emerging markets. And when you're dealing with that level of investments and in those markets, let's talk about the pipeline that we were talking about, how you identify, how do we expand the pipeline, how do we identify, and how do we incentivize investment in those opportunities?
Exactly. When we started in 2013 wanting to invest in emerging markets, quickly there was a pipeline issue. And so we had to be part of the capacity building, which, as mentioned before, the more you interact, the more you're part of building the ecosystem and defining how the pipeline is going to grow, the better you are as an investor. So for us, it was quite clear that we had to be building the infrastructure on the ground so that we could increase the pipeline of talents, of business opportunities, and hence then invest in these businesses. For us, the impact question is by default. A lot of people put us under that category in Europe, especially because, of course, we're in Bolivia and we're in Myanmar and we're in Nigeria. So by default, the businesses that we support usually are tailored to the bottom of the pyramid and very primary needs from healthcare, education, insurance, etc. But so our definition of impact is very simple, because it's just try and be an entrepreneur and hustle and build jobs in these economies. And there are so many services and needs that are not met. It's extremely powerful and needed to have these entrepreneurs on the ground.
Now, there was a little bit of a debate backstage right before we came on stage about this philosophy. So, because I said to Alisée, I said, the most fascinating thing you said to me is everything we're doing at SEEDSTARS is impact, just by the very fact that we're in these markets, as you just said, supporting job creation, supporting entrepreneurs. Now, Laurence, I want to turn to you. We talked a lot about how sometimes when entrepreneurs come to you for your fund, their vision, their impact thesis isn't as fully formed as you need it to be, as you want it to be, as your investment case demands it to be. Talk me through a little bit about how you grow with entrepreneurs, how you take them to where you want them to be, how much time is spent helping to develop that impact vision for some of your investments.
Well, in fact, I should say before that more and more entrepreneurs are coming to us and they want to have people like us at their table, which was not the case 4 or 5 years ago. So people come to us, and I'd say even if they have potentially the money to raise their funds, more and more they say, well, we want people like you around the table because you think differently. And we need to build this strategy because we know we have a strong conviction on this, and you're going to help us do this. And I'd say there's maybe in the market where it's completely empirical, I'm not sure, but I'd say there's 20% of the new generation of entrepreneurs who launch a company to change the world in terms of social or environmental issues. They launch the company for that. So I'd call them mission natives. And in there, there's a bunch of entrepreneurs who start a company with a strong conviction, and when we meet them, we feel there's a very strong potential, and our offer is to help them build a strategy on this. So I'll give you an example. Open Classrooms, which we've invested in 2016, 3 years ago, they came to us, the two real young CEOs, came to us saying, well, we have a very strong conviction and vision is that our business is going to make education more accessible. And we want the people to study and get diploma here at Open Classrooms to be able to be employed immediately after. So we challenged this for weeks. Who are really the people who are getting diploma? Is this vision the 1 or 2 year vision, or is it a long-term vision? Are you convinced this is a good place to be in your market? Because other education platforms don't have that strategy. They're more in a high-level, expensive courses for people very well trained. Well, Open Classroom took the other strategy, is to address the base of the pyramid with people who have low to no qualifications and that feel that they can build qualification with digital skills. And we finally got really convinced, in fact, we discovered that 40% of people getting diploma were level of high school or under. So there's really a great empowerment in what they do. And you can, brick by brick, become a data scientist and start all at the basic level. So we invested and we built everything because we built the tools, we challenged the strategies so we could have targets. So now they have two major goals, which are employment and base of the pyramid. And they got into, they're now an entreprise à mission, which is recognized by French law. They incorporated their purpose in their status just before raising 50 million euros with General Atlantic last summer. And they said to General Atlantic, listen, this is what we are doing. Our purpose is to serve accessible education. And what's really interesting, and what I think gives me a lot of espoir, drive, is that General Atlantic was particularly interested in how Open Classroom could disrupt the US market because of its low and accessible education costs in a market where education is very expensive.
And remains expensive. Please disrupt that market. Clara, I want to go back to a little bit about what you were saying and what you picked up there in the bottom of the pyramid, because all three of us have discussed this, which is, isn't this a reshaping, whether it's at impact in the traditional sense of impact, whether it's what Raise is doing in investing in all kinds of companies with a give back, with that give back up front, isn't it reshaping what we expect the shareholder structure to be for what investors should expect, that profit and doing good can be fundamentally intertwined? So many times when I talk to impact, and we've talked about this too, it's separate from people's general investment. It's what they're doing to be good. It's done for PR, it's image, and that's why it remains so local. How advanced do you feel we're in getting people to reshape their mind that this is not one and the other, but that together is the way forward?
So first, maybe I was not clear, but Raise is not investing only in company making give back. We are investing in normal companies. Of course, we want to like their values. We want to like the CEO, the way he takes care about his employees and so on. But I don't think a company can be sustainable if it's not a good managed, well, respectful company. So this is easy to check, let's say. What is for sure is that the young generation is putting in front of our eyes a reality that our generation didn't want to see. When I was young, the most important thing was to consume because it was good for economy, whatever we were consuming and whatever the impact on the planet should be. So, okay, we have given to the world water, energy, social care, education, and so on. And we have 7 billion of people who have access to that today, but at what cost? So what really matters today is to say we can't continue this way. As investors, if we're not taking our responsibility to say, I don't invest anymore in a company that doesn't take care about the external negative impact or doesn't take care about what really is the full impact of what the company is doing, we are responsible of what is really happening. And our role as investor is really to put that on the top of our priority. It doesn't mean that we will invest only in company doing dedicated to environment or to social link. This is that we would do in our vehicle dedicated to impact. But what really we want to do is to push any company to become an impact company, whatever the product they are doing. Maybe, you know, a company doing some chair can be an impact company if they take care about where is the wood coming from, where they do how they pay their employees, if they give back a bit of the benefit to support and to give chairs to someone who can't have one, and so on. And so it's just about changing the fact that profit is not against impact, it's not against the society, and it's not against generosity. It's absolutely the contrary. If you want a good engine, the best engine you can have is really to put together what we both have. We all have a brand and a heart. So if you can give your employee, if you can give your customer, if you can give your investor the capability to reconnect the heart and the brain and to be coherent when you are acting as a consumer, as an employee, as an investor, you will be the company where everyone wants to invest in.
Alisée, you are focused in areas where, as you said earlier, almost everything is going to be impact because of what you're doing. But then how do you do that? How do you scale up? When you look at SEEDSTARS and you look at how do I grow this, we've talked about the challenges with the pipeline. How do you want to scale it and scale this movement almost up the value chain to pick up on exactly these themes?
It's funny because for me and every entrepreneur I encounter and the people I work with, profit and purpose, it's an old conversation. It's not part of our topics, really. Yeah? It's kind of like, just don't be stupid. And in not being stupid, try, be good. Be good with your employees, have values that you set yourself. It doesn't mean you can't anticipate every good and bad decision and the consequences, but if the consequences are negative on the environment, adapt quickly. And I don't know if I think it's highly generational, but also not because we're better people, simply because we have no choice. It's a very different way to approach it. And I mean, I was speaking with entrepreneurs this morning. Some are really freaking out. And they're jumping into the sustainability because they really believe, I mean, we're heading straight to the end of the world. So, I mean, to put it in a dramatic cause, but if not, sincerely, no one I'm speaking with is saying, I really want to make money, but that means I'll have to treat the earth badly, or I'm going to have to motivate my employees and not care about what it's over, that conversation. In emerging markets, in Europe, I feel. And so now it's just to have intelligent people constantly level up the conversation and test out, experiment how we should operate as no longer these silo organizations, but these platforms that you plug in and out with workforce, with resources, and that allow us to evolve in a sustainable, closed economy.
Well, I hope every CEO, entrepreneur who's here takes those words to heart, and that profit and purpose should never be a separate conversation, and no longer is. Thank you so much for this panel. I can't believe we're out of time. It's been fantastic. Thank you guys so much.